So what I wanted to do is just take a couple of minutes and go through the charts. I've talked frequently in the room about having a macro view, kind of a big picture view of what's going on, and then using able trend charts, 3 9-minute, or in a lot of cases, Michael's also referring to the 5 15-minute charts as the trigger of when we go ahead and take a trade. So I thought it would be very helpful, I hope it is, to show you where we've been trading. So we've been talking a lot about this declining channel. It's the one that's highlighted in red. Big picture view here. If I back up to the 60-day, 60-minute, you can see how far back it goes. Actually back up to the daily, 1-year daily chart, you can see that it really starts by being defined back at the early part of November. And then it was confirmed in early December. It was confirmed again in late December. It was confirmed again in mid to late April. And that's the same declining level of resistance that we've been trading at now for the last, including today, 1, 2, 3, 4, 5, 6, call it 6 to 7 days, 6 to 7 trading days. So for the last 6 to 7 trading days, we've not been able to break above that declining line of resistance. That doesn't guarantee that we won't at some point, but what I've been looking at here is not only that, but the very short time frame. So now I'm going to switch down to a 10-day, 10-minute view. And what I've started to see here is that when we hit that declining line of resistance on the 6th of June, which was just 2 days ago, since then, as we've cycled back higher, we have been establishing a series of lower highs. So this is all on 10-minute bars. This is a 10-day, 10-minute view. So we have this pattern in place now coming off of that high on the 6th of June, coming across then the next high, which was on the 7th, coming across the next high, which was first thing this morning, and then the most recent bar, in fact, the bar just before the current bar, was trading up at that level of declining resistance. And so each of these three price points, right in here, right in here, and right in here, have been showing a pattern of lower highs. So that, at least on the surface, is telling me that there is some weakness forming. Now, how do you reconcile that with the able trend charts? Because as you've heard Michael talk about so many times, and I absolutely 100% agree, able trend charts are some of the best trade triggers that you'll ever trade with, you'll ever find. And that's why we use them. It doesn't mean that every trade is going to be a guaranteed winner. There's no method out there, there's no strategy out there, and there's no technical charting out there that's going to give you guaranteed wins. But we have a very high percentage of wins based on the able trend, and then applying the strategies that we use, where we use long vertical spreads, short vertical spreads, less often the short vertical spreads. We will buy to open a long put or buy to open a long call and leg into a spread, and we will then apply the management techniques which we've taught in our Profit Accelerator course. So the thing I want to point out here is that when I am scanning the charts, I might have periods of time where I'm taking no action at all. And that can be sometimes very frustrating, especially if you're a relatively inexperienced trader, because the perception is, I've found in working with traders, the perception is that active trading means we should be doing something. Now, Michael and I have joked a lot about how, sometimes people will take a trade because they're just bored with watching the activity. That's the absolute worst thing you can do, because it's not based on anything other than your desire to have some sort of action. So active trading means we are actively involved in assessing the market and looking for signals. Active trading doesn't necessarily mean that we're actively engaged in opening and closing multiple trades every day. Our track record so far for 2016 is very solid in terms of average daily performance, and we're happy with that. There's no reason to interfere with that. There's no reason to start to do things unnaturally. So think about a natural state of trading versus an unnatural state of trading. And if you think about natural occurrences of patterns, I'm going to go back to my bar chart here just for a minute. These patterns right here, where we hit this high, we hit the high again, we hit it previously, these are what we refer to as natural levels of resistance. They didn't exist because I had a line drawn there. In fact, I drew the line after they formed. What happened is that in the activity of the market, the NDX moved higher, stalled at that price point, and then moved lower. So that price point at the high is what we refer to as a natural level of resistance. On the other side of that equation is a natural level of support. It moved down to a certain price point where it stopped moving lower and then started moving higher, and all of the price points below or before that low were higher lows, and all the price points after that low were higher lows, and so that's a natural level of support. When you can evaluate your chart and you find natural levels of resistance and natural levels of support, that's where you can identify your patterns. Here's a natural level of resistance, and here's a natural level of support. So right in there was a range of movement that NDX was trading in. And when you can identify that range of movement, then you can more easily and more quickly identify when we're breaking above or breaking below that range of movement. Now, let me get back to AbleTrend and help you understand how do we merge these two views together. And folks, I'm talking about me personally. This is the way I assess the market. My team, Michael, Aaron, and Allison, they each have their own slight variation of how they assess the market and assess what the overall bias is. And what I'm sharing with you is what I do. I will evaluate each of the three indexes, NDX, SPX, and RUT, frequently throughout the day to assess whether we have a slight bias to the downside, a slight bias to the upside, a longer term bias to the upside or downside, etc. And then I take that view and I go look at my 3 and 9 minute charts on AbleTrend, looking for signals that now is the time to take an appropriate trade. So in the spirit of kind of tying these things together, when I see a sell signal come on AbleTrend, which we did just a couple bars ago, and that's on the 3-9 minute chart. When I see a sell signal come on and there is a 3-minute resistance forming on the 3 and 9 minute AbleTrend chart, and I know that on my bar chart, we're just coming off of what appears to be a declining level of resistance. And that cycle that forms that pattern is sitting inside of a longer term pattern that is a naturally forming declining channel. So I've got a declining cycle that's all contained inside of a longer term declining channel that goes back to early November. When I see that sell signal that comes on AbleTrend, that's where I may jump in and take a slightly more premature, slightly more aggressive trade. Michael said earlier that sell signal's not valid yet because we still had support printing, 9-minute support printing. And to be a conservative trade, you really want to wait until 9-minute support has stopped printing. Well, as of now, it has stopped printing. But what I'm trying to do is to help you understand where it may be appropriate to jump a little early. It's not just an arbitrary, hey, I've got this instinct or this gut feeling that I'm going to jump in early. No, it's based on the fact that AbleTrend 3 9-minute chart is giving us a signal to go short, and that signal to go short aligns with my macro view of what the index is doing overall based on my bar chart. So I'm combining the two views. Now, the other thing is when you look at the 30 and 90 minute, the 30 and 90 minute NDX chart, at the time that we were trading at this natural level of resistance, on the 30-90 minute Able trend chart, we were also trading at a 30-minute line of resistance, and we were starting to stall there. So you could argue that you're trading at the sweet spot on the 30-90 minute chart. You're trading at a level of declining resistance on the bar chart on a cycle, and you can see that we're pulling further and further away from the declining channel on the bar chart. So I see all that stuff. Then what I'm looking for is I really want a signal to go short on my 3-9 minute and take that signal. That for me is the final confirmation. If I see a signal to go short on the 3-9 minute NDX chart on Able trend, but I see a convoluted pattern that's unclear or inconsistent on my bar chart, that's when I'm going to sit back and I'm going to wait for confirmation and take a more conservative entry on that trade with the Able trend signal. So as I was studying this and I was listening to Michael in the background, I just decided it might be helpful for you to correlate those two, because frequently I've shared the bar charts with you, and I don't want you to come away scratching your head feeling as though you're disconnected. You know, one time we're looking at the bar charts, one time we're looking at Able trend. That's not at all the case. To me, it all merges together for uh, a global view of what the index is doing, and some of those views will help me determine whether or not I'm willing to be a little more aggressive on my entry, or I want to sit back, I want to wait, I want more confirmation and take a conservative entry. So we've talked a lot about conservative entries versus aggressive entries, more risky entries, and it's not just a throwing a dart at a bullseye and hoping you win. It's all based on chart views, multiple patterns, and multiple time frames, and then ultimately we see the signal. I feel confident going in, or I feel confident sitting on the sidelines and waiting. And then sometimes the reality is you get some positions in your account, and if you are being wise about your capital, you're not going to overextend your risk. You should, at the beginning of your trading, at the beginning of the year, if you're coming into the year trading, you should set aside the amount of capital that you're willing to put at risk to your trading. That doesn't mean that all that capital will necessarily be in your trading account, but you need to decide how much capital you're willing to expose to the market, and never, ever exceed that. Never put yourself at a point where you've now got to make a hard decision about, do I dig into other funds, and do I put more money at risk, and now that's going to cause me to lose sleep at night. So I'm sharing all of this with you because there's so many varying degrees of conservative approach versus more aggressive, risky approach. But I like to think that even the aggressive, risky approach is one that is based on information. It's one that's based on knowledge. It's one that's based on willingness to take a certain level of risk and then go forward confidently with what we're doing. But as I started to say, you're going to sometimes get to a point where there are very, very clear signals, and you're going to take a pass on them. And the intelligent thing to do would be to take a pass on them, because you may already have enough risk in play and you're waiting for some of that to play out. I also encourage you not to get impatient with your trading. Like I said, active trading is about being actively engaged with the market, not necessarily taking every single trade every single day. Active trading doesn't mean that you necessarily have to be profitable every single day, although that's kind of an ideal state. You don't have to be profitable every day to have some pretty significant wins over the course of a year. You just have to be wise about the positions that you take a pass on some other positions, and let the good positions come to you using capital that you are confident in deploying into your trades. Michael does a fantastic job of kind of filling the dead space in the live trading room. And frankly, there are a lot of times where there's really just not that much going on. You can get into a pattern like NDX is right now, where it's trading in a 23-point range. That's about half the average daily range of NDX. That's pretty mundane, although there are good profit opportunities on a 23-point trading range if you catch the right signals. The reality is you're not going to catch all the signals, because if you take a conservative approach, you're going to wait for Able Trend to confirm, and by the time you confirm, some of that opportunity may be gone. That's okay. That's not a negative thing. That's not a bad thing. What you're waiting for is the ripe opportunities that will allow you to harvest excellent profits on some great trades. You know, we've had some very, very strong days. You know, I think we've had a day in January where we made, I think, $17,000 in one day. We've had other days that have just been so ho-hum. I mean, frankly, um, you could take a nap and wake up an hour later and it looks like the market hasn't moved at all. And that's okay. And we've had other days where we've taken losses. Um, Good news, you know, knock on wood, we have not had a losing week so far this calendar year. And that's because we try to apply a reasonable level of diligence to our entries, as well as we manage positions as necessary, and sometimes push troubled positions further out in time just to give us more time in order to manage and adjust those trades. So I hope that's helpful to you. I just wanted to share with you here in the live trading room um, what it is that I'm seeing on a macro basis on NDX and how that relates to the Able Trend signals. Hands down, the Able Trend signals, particularly in my opinion, the 3 and 9 minute signals, are some of the best trade entry signals you'll ever want to trade. They're going to make you money. We like to think that we have a conservative goal in the live trading room to make $400 a day, and that's actually very easy to do, to make $400 a day. We're actually averaging right around $2,300 a day. That's our actual average. So, you know, we've got some wiggle room there. We're doing really well, and I hope you guys are too. And I hope this was helpful to you. But I just wanted to kind of fill in some of the dead space here and give you a little bit more education on how to marry these two views together, bar chart with the Able Trend charts. But always, always, in my opinion, you should use the Able Trend charts for your entry signals. All right, so I do appreciate also everyone being here, and those of you who have joined us for the first time today or this week. Thanks for being here and sitting in and observing what we're doing. We're here to trade. We're here to make money in our personal accounts, and we're here to allow you to see each of those trades with full transparency. We share each of those trades with you. We have one account that you see, but Michael shares with you every trade that he's placing in his personal accounts, and you can follow along with us. The Profit Accelerator program is a 4-hour webinar series that will allow you to learn more of the specifics and more of the details of the Able Trend charts, the strategies we use, the management techniques we use, as well as how to tailor this type of trading to your specific risk tolerance and your account size. So again, thanks for being here, everyone. And I'm going to turn it back over to Michael.